Back then, New York was called New Amsterdam and was ruled by the Dutch. Other countries wanted it, like the English. Thus began the Dutch-Anglo Wars. The Dutch needed something to defend themselves, so they got slaves and volunteers to build a wooden wall from Hudson River to East River. By the way, the street that ran along this wall was called Hetsingel. 7 years later, the English visited New Amsterdam with 4 frigates loaded with hundreds of English soldiers. They demanded the Dutch surrender, and they did. From then on, that piece of land will be called New York, named after England's King Charles II brother, the Duke of York. The British also changed street names, including Hetsingel to Wall Street. The wall on Wall Street was now used by the British to defend themselves from their enemies. It stood for 35 more years, until being demolished in 1699 because of its poor condition. Now under new management, Wall Street was gonna have improvements for the better. City Hall got built, sugar refinery, whipping post, Pillory. But Wall Street now had stocks, not the stocks I have in mind, but at least they got rid of the slave auctions on, never mind. Even before the British were in control, the Dutch would have slave auctions on Wall Street. Slave owners would come down to Wall Street and auction their slaves. Incoming ships would unload people directly into auction. Families would be wailing and in tears as they were separated from each other, never to see each other again. The slave trading market was growing, and in 1709, the British wanted a piece of the money by taxing when a slave was purchased. In 1711, a market house was built, where many goods were bought and sold, but the majority of purchases were of slaves. By 1730, 42% of New York's population owned slaves, the second highest slave-owning city, with Charleston, South Carolina being the number 1 highest. But the wealthy and aristocrats of New York weren't happy with this. They disapproved of the public auctions as well as how disgusting it looked and poorly the streets were. So they petitioned to have it closed down. And in 1762 it did. But despite this, slaves were still being bought and sold throughout the streets of New York, including Wall Street. During the Revolution, the British had control over New York. Many families had left New York. British soldiers could kick you out of your house if they wanted to. They used Wall Street as headquarters for the military. The American Revolution lasted 7 years. In those 7 years, battles caused damage to the infrastructure on Wall Street. This went on until November 25th, 1783, when the rebels took control of New York and the British evacuated for good. New York was a mess after the war, but many saw this as an opportunity to build it better than before. The Bank of New York was established by Alexander Hamilton, and the help of William Dewar, more on him later. The Society of Manumission of Slaves was founded, which was a movement to free slaves from their owners, and City Hall was changed into Federal Hall, where George Washington was sworn in as President of the United States. Many things were improving. All they needed is more money. Because of the war, America was in debt. So they issued bonds to investors to raise funds instead of raising taxes, because they know what happened last time taxes were raised. There were 3 cities that had lots of financial activity at the time: Philadelphia, Boston, and New York. Out of the 3, New York would have more people trading bonds and shares of emerging companies. This was great because more people were investing in companies that were seeking to build America. Many wealthy people were also getting into trading, especially one man, William Dewar. William Dewar was British, born in England to a wealthy family, and came to New York in 1773 at the age of 30. Despite being British, he supported colonists and took their side against the British. While in America, he held big positions of power and influence. Member of the Continental Congress, New York judge, he signed the Articles of Confederation, was Secretary of the Treasury, and later Assistant Secretary to the Treasury. After the Revolution, he started speculating and buying bonds as well as land. All of this while holding higher positions in companies and office. He took out loans from banks to buy the stock of a company named SUM, which stood for Society of Establishing Useful Manufactures, which was an organization that invested in new growth of infrastructure. By the way, he was governor and chief salesman of this organization. The main reason he was buying more stock was to drive up the price and sell it at a higher profit. But he really crossed the line when he took out $292,000 from the treasury of SUM, the company that he worked for. Dewar kept buying more stock and persuading more people on the curve side on Wall Street to buy. This went on until he was caught. Oliver Wilcott in the accounting department discovered $292,000 missing at the company. He confronted William Dewar. Dewar admitted it was him. Dewar was sued. He was also charged by the Treasury for malfeasance, wrongdoing by public official. Remember, he was Assistant Secretary of the Treasury. On top of that, on March 9, 1792, he couldn't pay back his loans or any other debts, so he declared bankruptcy. Dewar can't pay back his loans, can't drive up the price of the stock and other bonds. He's pressed with charges and arrested. The word got out. Selling started and the domino effect begun. Many people lost their money. Banks were in trouble because many people had over-leveraged themselves in order to buy more stock and bonds. The sum stock price in February 8, 1792 was $136. On March 13th, the stock was $30 per share. This stock, as well as others, took a downfall. William Dewar was taken into Devers Prison, where he spent the rest of his life there until his death on May 7, 1799. He was 56. William Dewar was the first insider trader on Wall Street and had part in America's first market crash. With the first crash caused by speculation and manipulation, something had to change. A lot of people were affected by the Wall Street crash, especially 24 traders. In March of 1792, those 24 traders discussed the idea of forming a club. To prevent speculation, they were only to trade with each other, no outsiders. Anyone that wanted to join would have to be approved by other members and pay a fee. And to prevent overpriced stocks due to the high fees made by manipulative sellers on Wall Street, a flat rate of 0.25% was set. He drafted the agreement and signed it 2 months later under a buttonwood tree on Wall Street. The Buttonwood Agreement. More people signed up in the upcoming months, and the club grew. To avoid being on the curbside where non-member traders were, the Buttonwood traders moved into the Tontine Coffee House and continued to operate. But why does this matter? Because the first stock exchange in America was in Philadelphia, the Board of Brokers of Philadelphia, now known as the Philadelphia Stock Exchange. The Buttonwood founders studied and visited this exchange to get an idea of how a real stock exchange operates. They wanted to grow their operations back in New York. So in March 8, 1817, they opened their own exchange, the New York Stock and Exchange Board, which would later be called the New York Stock Exchange. But before becoming the most powerful stock exchange in the world, it would have to go through tough times in the 19th century and 20th century.